Da, 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 da. So the question is, are we live? It looks like we're live. Okay, excellent connection. We're back on. So, as some of you may know, I joined Etoro way back in October, and in December I enrolled in the Popular Investor Program. And initially I was running this, doing this weekly Popular Investor Journey update. And along the way, I sort of stopped uploading, mainly because the portfolio run into a wall. But then, given that I have a number of copyists, they really want to stay engaged as to what exactly are the developments behind the curtain. So I'm bringing back the series. It's going to be more of a bi-weekly series now, and hopefully you get to see what the decision making is like behind the curtains. And our model seems to have slowly converged into a long-term kind of model, so it makes it more interesting to think deeply about the portfolio holdings. So, anyways, let's start with episode 10 of the series. Yes, it's been 10 episodes already. Who am I? If this is the first time you tune in, I'm an Etoro Popular Investor. I'm running an AI-based portfolio, so basically I'm using an artificial intelligence model to do stock selection. Currently, I have 14 copies on the platform. During my heydays, that was in January 2021, I had somewhere around 25 copies, but yeah. Growth stocks hit a wall, went into a deep drawdown, and unfortunately I lost a lot of these copies. The series is just to document my journey, so one, it gives my copyists a view, and so it gives them sort of a feel of being in the driver's seat, and two, I think it's going to be a good idea that I start sharing the reason why I hold some of these stocks. It's getting more interesting over time, and I think it's going to be useful to share it, so as to help copyists build better conviction in why we keep holding certain stocks and not sell them immediately when they go into the red. Again, all comments are welcome, as I'm looking to refine the process over time. So, the first thing we're going to do is really think about how well the model has performed over the life of it since it was launched. And we are basically trying to answer the question, are we doing better than our benchmarks? And the answer, unfortunately, is no. We are very much underperforming all our benchmarks, if you're being honest. So what I'm plotting here is the rolling cumulative 3-month performance. So we started this model in, I think, 12 October, and we are basically asking, on a 3-month rolling basis, how has our performance compared to our benchmarks? If you look at it, so compared to the SPY, so on the x-axis we have the months, and on the y-axis we have the compounded return. So for the first 3 months, on a rolling basis, we were doing very well. So we were constantly beating our benchmarks by a reasonable margin. And then the drawdowns in January and February hit. That's why from March, our SPY benchmark has beaten us and continues to beat us. Hopefully over time, we will overcome this. This is true for all equity benchmarks. So it's the same story for the Dow. For the first couple of months, we were beating the Dow, and when we went into drawdown, the Dow has sort of sustained a reasonable performance over time, and has opened up a reasonable gap above us. Look at the QQQ, and this is the one benchmark that we sort of seem to march head to head. So it beats us sometimes, we beat it sometimes. So let's see. So far it seems most of our performance seems to be coming from the QQQ, which is really strange given that we hold just a fraction of the stocks in the QQQ. And the AIEQ is publicly traded artificial intelligence ETF, so I figured it would be a very reasonable benchmark to compare against. And across all the benchmarks, that one seems to really move in line with what we're doing. So for a lot of points, we do mirror each other 1-to-1, right? So they've been beating us forever, but then over the last couple of months, we've been slowly edging out their performance. So that's very interesting. Okay. If you look at the performance against these benchmarks in a different screen, you should probably add the AEIQ next time. It should be here. In terms of risk-adjusted performance, we are not doing too well. So in terms of cumulative return over the last cumulative return since the launch of this portfolio, we have around a 25% return, slightly below the Nasdaq, and also not too far away from the Dow and the SPY. Given that the model is constantly learning, I'm hoping to see much better performance over time. So the markets over the last couple of months have been very different from what we're used to. So I wasn't expecting the model to completely outperform these guys. So it's nice that it's still, over a period of 6 months, hasn't departed too much in terms of poor performance. But we are expecting it to do much better going forward. When we look at the risk metrics, it's the Nasdaq did worse than we did in terms of drawdowns, slightly worse than we did, and the Dow seems to have had the lowest drawdown over the last 6 to 7 months. In terms of risk-adjusted returns, it's interesting that we are still providing an alpha with respect to all these equity benchmarks. So I guess this is also partly coming from the crypto positions we hold in the portfolio. They might explain this slight improvement, and also the stock selection we do, right? So it's all not just crypto. In terms of risk-adjusted performance, we're in bottom place. So if you look at how much return we've given our investors per unit of drawdown, it's very bad. Bigger than the Nasdaq, but way smaller compared to the Dow and the SPY over the period. Looking at our Sharpe ratio, also very low compared to what the equity benchmarks have provided over the last 6-7 months. So Etoro ratio, a similar story. So the model has a lot of room to improve, and we expect it to improve over time. So what have been the drivers of our return, right? So what are the, how do you call them? What are the stocks that have really contributed to the return we've seen? And to really tell a story about this, I decided to do it in 2 ways. So how much have our present highest conviction picks done since they've been added to the portfolio? And how well have our longest holdings done since they were added to the portfolio? So looking at what the stocks presently in the portfolio, our highest conviction stocks are Pinterest, Digital Turbine, and Plan. So these are highest conviction picks according to the AI model that are presently in the portfolio. And since we added them, a lot of these stocks are in drawdown. So Pinterest is currently down around 18% since we added it. Digital Turbine is down around 12% since we added it. It's only Plan that is relatively flat since we added it. So a lot of high growth stocks have experienced a huge drawdown, and unfortunately that has affected our portfolio. If you look at the longest holdings, that paints a much more interesting picture. So our longest holdings are mainly AMD and Candids. So AMD is slightly up 1.65%, and Candids is up around 21%. The second longest holding is Novacure, and Novacure is up around 21.85% since we first started it. So the present position we hold in the portfolio is up around 60%, but then we sold and we rebought, right? So if you're really asking the question, what's the return since we first started it, it's up around 21%. So looking at these longest holding returns, it really gives me hope. The model is really picking up on high growth stocks that seem to hold their value over much longer periods. Our highest conviction picks, we just added them, they're in drawdown. If this is going to repeat itself over the next 6 months, then I'm really hopeful, right? It's basically saying over the next 6 months, we expect to see on average around to a 20% return for these highest conviction stocks. So let's see. Is this going to be true over the next 6 months or not? We'll all be here to find out. So that's basically it. This was supposed to be the first return episode of my journey. And I'd like to keep it short and simple and straight to the point. Okay, so if you have any questions, please leave a comment. If not, see you guys in the next 2 weeks, I believe.